Hey everyone, welcome back to Corporate Decoder. Today we are diving into Old Dominion Freight Line's latest report, and it looks like they are shipping out some interesting news as we head into February 2026. Join us as we decode what is really going on behind those numbers, and hey, before we get into the nitty-gritty, if you like getting these insider looks at company filings, make sure you are subscribed, and don't forget to join our Discord community in the description below. We're building a great space to chat about these things. Now, the date here tells us this report is about events that happened up to the 4th of February 2026, and it's all about their financial performance, specifically for the fourth quarter of 2025, which ended on the 31st of December 2025. Think of it as their year-end report card. This filing is for Old Dominion Freight Line Incorporated, a company you might know from their extensive freight services. They are a big player in the trucking industry, and like any major company, they have to report their financial health regularly. If you are invested in them, their stock ticker is ODFEL, and it's traded on the Nasdaq. So what they report can definitely impact those who own a piece of the company. The main event here is under item 2.02, which covers their results of operations and financial condition. This is where companies tell everyone how they did financially, and importantly, they're attaching a press release with all the juicy details about their fourth quarter and full year 2025 results. This press release exhibit 99.1 is the key document we need to look at to understand their performance. Often, these press releases are a bit more reader-friendly than the dense sec forms themselves, but they're based on the same underlying financial data. They are usually meant to summarize the key financial highlights and provide some management commentary. We are not going to analyze the press release itself directly, as that would be hard to do in this format, but we will extract the spirit of what such a release would contain and how it relates to the filing. The filing tells us that Old Dominion Freight Line is reporting on its 2025 fourth quarter results. This is crucial because the end of the year is a time for companies to show how they finished the year and set the stage for the upcoming year. Investors and analysts pay very close attention to these numbers to gauge the company's health and future prospects. Usually in these reports, companies will talk about key performance indicators like revenue operating income, net income, and earnings per share. They will also provide comparisons to the same period in the previous year, often showing percentage increases or decreases. For Old Dominion Freight Line, a company in the transportation sector, these metrics can tell us a lot about how much freight they are moving, how efficiently they are doing it, and ultimately how profitable they are. For example, if their revenue shows a significant increase, it could mean they are hauling more goods, potentially due to strong economic activity or gaining market share. Conversely, a dip in revenue might signal a slowdown in the economy or increased competition. Operating income and net income are important because they show how well the company is managing its costs of doing business. If profits are rising faster than revenue, it suggests good cost control. If costs are growing faster than revenue, it could be a red flag. Earnings per share, often the most watched number by investors, is the portion of a company's profit allocated to each outstanding share of common stock. A higher earnings per share generally means the company is more profitable on a per share basis, which is typically viewed favorably by the market. While this filing doesn't contain the detailed financial tables in the body of the 8K itself, it references the press release which would contain them. Based on the typical structures of these reports, we can infer that Old Dominion Freight Line would be presenting their fourth quarter and full year 2025 financial results. Imagine these numbers, for instance, if their total revenue grew by, say, 8% compared to the fourth quarter of 2024. That would mean they are bringing in significantly more money. If their net income increased by 12%, that would suggest they are not only making more money but also keeping more of it as profit. However, we also need to consider what drives these numbers. For a freight company, things like fuel costs, labor, and equipment utilization are critical. If fuel prices spiked in the fourth quarter, even with higher revenue, their profits might be squeezed if they couldn't pass those costs on to their customers. On the other hand, if they've implemented cost-saving measures or invested in more fuel-efficient trucks, they might see improved operating margins. The market's reaction to these results is also key. Old Dominion Freight Line is a publicly traded company, and its stock price will react to the news. Positive results could lead to an increase in their stock price, while disappointing numbers could cause it to fall. Investors are always looking for signs of growth, stability, and smart management. A company like Old Dominion is in a cyclical industry, so understanding where they are in the economic cycle is important for interpreting their results. Are they expanding during a boom, or are they showing resilience during a potential downturn? The filing also contains specific identifiers like their IRS employer identification number 56-0750-1714, which is a unique number assigned for tax purposes, and their state of incorporation, Virginia, which is a piece of their corporate identity. And finally, we have the signature section. This signifies that the report has been officially submitted and certified by an authorized representative of the company. In this case, Clayton G. Brinker, who holds the title of Vice President Accounting and Finance. This is the principal accounting officer, meaning they are responsible for overseeing the company's accounting practices and financial reporting. His signature on the 4th of February 2026 confirms the accuracy of the information presented. Now, let's look at the bigger picture. Old Dominion Freight Line is a significant player in the less than truckload, or LTL, freight sector. This means they consolidate smaller shipments from multiple customers into one truck, optimize routing, and deliver them. It is a complex business that requires a lot of coordination and efficiency. Their performance is often seen as a bellwether for the broader economy because freight movement is tied to manufacturing, retail sales, and overall commerce. If the fourth quarter of 2025 showed strong growth for Old Dominion, it could indicate robust consumer spending and business activity. However, we also need to consider competitive pressures. The trucking industry is highly competitive, with many players vying for market share. Old Dominion's ability to maintain or grow its market share while managing costs effectively is crucial for its long-term success. Looking at the overall direction, companies like Old Dominion are investing in technology to improve efficiency, such as advanced tracking systems, route optimization software, and maybe even exploring new energy sources for their fleet. These investments can be costly upfront, but can lead to significant cost savings and improved service in the long run. The financial results will reflect the success of these strategies. Are they seeing a return on their technology investments? Are their new fuel-efficient trucks making a difference in their operating expenses? The risks for a company like Old Dominion are also quite clear. Economic downturns, rising fuel costs, labor shortages, and regulatory changes are all constant threats. For example, a significant increase in diesel prices can dramatically impact their bottom line if they can't offset it with higher shipping rates. Labor is also a big issue. Finding and retaining qualified drivers is a perpetual challenge in the industry. In conclusion, this 8K filing through its reference to the press release signals Old Dominion Freight Line is reporting its 2025 year-end financial results. The key takeaways would be how their revenue and profits performed against expectations, and the prior year strong results would suggest a healthy business and potentially a good economy, while weaker numbers could indicate challenges, their operational efficiency. Cost management and strategic investments in technology and fleet will be key to understanding the story behind the numbers. It's about more than just profit, it's about how well they are navigating the complexities of the transportation industry. Alright, that is our breakdown of what this Old Dominion Freight Line filing is all about. What is your take on these results and what they might signal for the company and the broader economy? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate documents. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.